buy Bitcoin and shut the fuck up.
Bitcoin is up 2,000%.
You don't need to get fancy with it.
2,000%.
We're going higher.
How high?
We're going much higher.
Not going to be a one-way straight line to, Bitcoin at $2 million, but it's going to trend in that direction very, very heavily.
The central banks are seeing themselves in the mirror, and they don't like what they see because the panic is setting in.
This is a sovereign debt crisis. We can all see it. It's blatantly obvious.
They realize their days of money printing can only fuel the Bitcoin revolution.
They're going to do what they always do, what they've done time and time again, and what more and more people are figuring out.
Buy and hold. That's what I've been doing.
Lepard opens by identifying March 2020 as a turning point in financial history. That month, U.S. 10-year Treasury yields briefly collapsed to just 50 basis points a signal. He argues, if something much deeper, what followed wasn't just a rebound, but the end of a 40-year deflationary era and the start of a new inflationary regime. The root cause? A structurally fragile fiat system built on perpetual debt creation, where money must constantly expand to service existing obligations. In this framework, the money supply can never stop growing, and that has profound implications for policy, markets, and individual wealth. And before that, be the one who says I was here before 100K. I'm on a mission to hit 100K subscriber before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comment. Let's win and grow together.
In March of 2020, the U.S. 10-year briefly traded for 50 basis points, and then it reversed, and it reversed hard. And in my view, what's happened is we've gone from a 40-year deflationary trend. We now live in an inflationary era. And the reason for that is that finally, more and more people have come to understand what you've always said: you can't taper a Ponzi, and that is in a system where money is debt, and debt must continually grow because you have to create debt to service the interest on the old debt. You have to grow the money supply. And so they were able to mask the inflation for 40 years, Max, as you and I both know, through a lot of beneficial things. I mean, they had shale oil, they had the China, people working for pennies and other things that helped create a fake sense of deflation. But all the while, they were still growing the money supply at 7 or 8% a year. And that the fact that the money supply has to continue to grow is finally being recognized by more and more people, and that's leading to more and more people recognizing that they have inflation and that we will have more inflation. We know right now China is printing massively because they had a real estate collapse.
Right.
And we also know that they do printing that they don't call printing. I mean, let me give you an example.
Yeah.
They go to Japan and they probably say something like, you buy our bonds and then we'll give you a cheap swap line to give you the money to buy our bonds with.
Right.
I mean, there are all kinds of things that are going on behind the scenes that more or less represent monetary debasement, but we can't see them because they don't want us to see them. Another good one is the SLR, which is the supplementary leverage ratio, which limits how many bonds the banks can buy. Well, they've already hinted that they're going to eliminate that. So effectively, they're going to enable the banks to do QE, which is really what they did in World War I, where they said to the banks, hey, buy these Liberty bonds, and we're going to give you money cheaper than the Liberty bonds. You're going to make a positive carry. Right? They're going to do the same thing here. They're going to do what they always do, what they've done time and time again, and what more and more people are figuring out. And that's why sound money is absolutely crushing bonds. I mean, since 2020, Bitcoin is up 2,000% measured in sovereign bond terms. 2,000%. I mean, and that's because sovereign bonds are down 60% and Bitcoin's up, 10x. So it's just, this is a sovereign debt crisis. We can all see it. It's blatantly obvious. Will there be zigzags? Sure. And as you point out, there will be times when they do things that make us think we're wrong. And it's not going to be a one-way straight line to, Bitcoin at $2 million. But it's going to trend in that direction very, very heavily. The great advantage that all Bitcoiners have, in my opinion, is that we understand something that's absolutely true. It's almost mathematically true. And we also understand the way the system is constructed, and there's no way for the system to stop what they're doing. And so, we know where it's going. Now, the thing we don't know, the thing that's tough, and it's been tough for me because I've been fighting this battle for 40 years, as have you, is we don't know the zigs and the zags, and we don't know how fast. But I sleep well at night knowing that my kids are going to be completely financially secure because the things I own are going to go up in value in an enormous amount. It's analog sound money, and it's the second best to Bitcoin. Bitcoin's going to crush it in terms of alpha. But as I always say, you can't print gold. You can't print Bitcoin. And so for my 80-year-old clients who don't want to have a 50% drawdown, some of them own gold, and that's okay. Yeah. And it's not going to go up as fast, but it's not going to lose value. 8 billion people know that it's got value. And, Bitcoin will ultimately demonetize gold. That will happen, but not tomorrow. There will be plenty of time to make the transition from one to the other.
Just buy Bitcoin and shut the fuck up.
There we go.
That's the only thing you need to do. You don't need to get fancy with it. Just buy and hold. That's what I've been doing. And look at me. I'm Max Keiser. That's what happened. Am I right? I'm right.
There we go. We got the legend.
Now, where's everybody?
Max, where are we going now, man?
We're going higher.
How high? Tell me.
We're going much higher.
Much higher.
Because the panic is setting in. The central banks are seeing themselves in the mirror, and they don't like what they see. They see a leech. They see a parasite. They realize their days of money printing can only fuel the Bitcoin revolution.
It's a little hard to say. Nobody knows exactly when. The strains are all there, though. The Japanese bond market falling apart. That's certainly a big
Yeah,
night.
I think this is the straw in the wind. This for 20 years, Lawrence, we've been talking about the yen, the Japanese bond market, and how it fits into the global Ponzi scheme.
Right.
And it's very slow motion train wreck. I'm not sure people fully understand the interrelationship between the Japanese bond market, the yen, or what's called the yen carry trade,
Yep.
and the big print.
Lepard argues the unwind is already underway, a slow-motion train wreck that's now accelerating. When the world's most stable funding base starts to crack, the rest of the financial system is inevitably close behind. But despite the looming risks, Lepard ends on a powerfully bullish note. For those watching closely, Bitcoin is a lifeboat off the Titanic, mathematically finite, decentralized, and immune to the manipulations of monetary policy. In a system built on endless debt and devaluation, Bitcoin offers clarity, control, and escape.
And the bottom line is, as we all know, is that fiat is a Ponzi. And of course, as you pointed out years ago, Max, you can't taper a Ponzi scheme. And the biggest source of cheap fiat for many, many years was Japan, where they had 0% interest rates. And so people would borrow in yen terms, and they'd use that money to get yielding assets, and it was a carry trade. And that all worked great as long as, the yen interest rates were low. But what we're now seeing, and it's a really notable move, I mean, it's almost gone parabolic, is that the long bonds in Japan, the 30 and the 40 year, are really starting to hockey stick up. And from, almost sub 100 basis points, they're now in the approaching 400 basis point range. And so to me, what that indicates is that people are losing confidence in the underlying strength of the Japanese currency. And they know that just like America, Japan is going to have to print. They're going to have to print massively.
Right. I mean, just to get into the technical a little bit. So when you say that people are short the Japanese yen or selling the Japanese yen, just so people understand the mechanics of that. So in other words, if I want to raise a bunch of money and I want to take that money and I want to invest it somewhere, I can go to Japan and I can sell short yen. I can sell yen in the open market short.
Right.
And the reason why I would do that is because the interest cost on my short sale is unbelievably low, like almost less than 1/10 of 1%.
Right.
So therefore Japan becomes the least expensive place to borrow money.
Correct.
So you're borrowing money in the form of selling yen in the open market in a margin account as a short seller, right?
Right.
And you take the cash, and if you put it into the U.S. Treasury market yielding 3 or 4 or 5%, you're making a positive cost of carry. Okay, that's where they come up with the term carry trade. Okay.
Correct.
So now if you look at the global market of all these fiat currencies, every country has a different interest rate. And so at the bottom, though, for decades, it's been the Japanese yen.
Correct.
So the Japanese yen becomes the base layer of the global Ponzi scheme.
Correct.
And so what we're seeing now is an unwinding of this global Ponzi scheme. So interest rates or the cost of borrowing are going up. Tell us what instigated this reversal in Japan.
Well, I think a couple of things. First of all, Japanese inflation has been going up. And the yen has been weakening, I believe, over time. We put some more tariffs on, the stock market will fall, and we'll catch a bid in the bond market. Briefly, they do, but then the bonds just keep marching higher.
Right. And he says stuff like, well, we're going to stimulate the economy by, not raising rates or maybe lowering rates. It's the supply side economics theory that's not, has
well,
never
and
worked.
what's very interesting is, of course, the Trump administration started off with Doge, which was a noble effort, but eventually they had to pivot. And as Lynn pointed out, they've now gone to, okay, well, let's not worry about Doge. We're going to outgrow it.
Right.
Well, the only way to outgrow it is to have GDP go up faster than debt. And the only way GDP can go up faster than debt is either we get an enormous productivity increase, i.e. we get fusion tomorrow, which isn't going to happen. We get total AI tomorrow, which isn't going to happen. Or we inflate the underlying currency so that the GDP number gets bigger, even though the number of goods and services provided does not get bigger.
But there's another paradox here, because if you try to grow the economy, you have to do CapEx. You have to borrow.
Right.
And your interest, your borrowing costs are going
getting
up,
higher. Yeah.
And the interest on the borrowing is going up.
Yeah.
So you don't have room
That's
to
right.
borrow,
You're crowded
even
out.
to grow
Yes.
the economy on that side either.
Yeah, that's another great point. That's another great point. Yeah.
Right.
So again, what the book points out, and once again, thank you so much for writing the brilliant foreword to the book. What the book points out is that they are trapped, and all roads lead to monetary debasement. They just do.
Right. So let's talk about the timing of all of this, because, the bond market having a fall has been the widowmaker for 20, 25 years.
I know.
Because they always come up with some way to extend and pretend.
Yeah.
But let's say the timing, and I think the Japan market is telling us that this is the end.
He fully acknowledges the volatility, the FUD, and the inevitable market corrections, but remains unwavering. Just buy Bitcoin and shut up. For those who truly understand the structure of the current financial system, this isn't speculation, it's a strategic hedge against the inevitable collapse of Fiat. While gold still holds value, especially for conservative or older investors, Bitcoin is where the exponential alpha lives. In his view, Bitcoin will eventually demonetize gold, and anyone holding BTC today is still early to the biggest monetary shift of our time.